BigBear.ai Holdings Inc., trading under the ticker BBAI, is currently sitting at $8.23.5, which represents a significant jump of over 16% on the day. Now, the common narrative here is to just look at that number and get excited, to think this is a sign of a massive turnaround or some fresh, undeniable momentum in the AI space. You see this all the time with smaller, more volatile names like BBAI. They catch a bid on a headline and suddenly everyone thinks it's the next NVIDIA stock, the next huge success story. But if you look deeper, if you peel back that initial layer of surface-level excitement, you'll see something different. The reality is this isn't a news story. It's a story of extreme volatility and a market that is constantly grappling with a deep, fundamental tension. The expectation is that the recent headlines about new contracts and partnerships are translating directly into a healthier, growing business. The reality, however, is that this stock's wild swings are tied more to trading psychology and short-term news catalysts than to a solid foundation of consistent, sustained revenue growth and profitability. This company is a classic example of a name where the expectations of its potential clash directly with the current, very real challenges of its business model. Today's sharp move up isn't happening in a vacuum. It follows a series of very specific news items. We've had a string of announcements about new contract wins, most notably a high-profile one with the U.S. Navy for maritime awareness, and other agreements like the one to install their biometric passenger processing system at Nashville International Airport. These are the kinds of headlines that get retail investors talking, the kind of news that lights up message boards and gets people thinking about investing in the next big thing. And you can see that in the volume. It's enormous today, far exceeding the average daily trading volume. This suggests a significant amount of fresh interest, likely from both individual investors and short-term traders. But if you look at the recent past, specifically around their last earnings report, you'll see a very different picture. Just over a month ago, the stock was in a freefall after the company reported disappointing Q2 results, with revenue down a notable 18% year over year. They even cut their full-year guidance, which is a major red flag for any business, let alone a growth-focused one. Management pointed to a delay in government contracts as the primary reason for this revenue decline and the guidance cut. So you have this sharp contrast, a company that from a fundamental perspective is currently shrinking its top line, yet the stock is experiencing massive euphoric rallies on the back of new contract announcements. This is the tension between expectation and reality. The market is expecting these new wins to solve the core business problem, while the company's recent performance shows that securing and executing these government-related deals is a lot harder and more unpredictable than it sounds. Let's talk about the business itself for a moment. What does BigBear.ai actually do? They are a provider of AI-powered decision intelligence solutions. In plain terms, they build and sell software and services that use AI to help organizations make better decisions. Their clients are primarily in the national security, defense, and intelligence sectors, but they are also making a push into commercial and critical infrastructure areas, which is where that Nashville Airport contract comes in. They take data, clean it up, analyze it with machine learning, and provide predictive analytics and visualizations. Their business model is a mix of recurring software revenue and professional services. The expectation is that because they operate in the highly appealing AI and government technology spaces, they have a natural tailwind. The reality, however, is that government contracts are notoriously lumpy and subject to delays. They can be very large and profitable, but they're also unpredictable, which can make a company's financials look very messy from quarter to quarter. This is exactly what we saw in the last earnings report. The expectation was that being in a hot sector would translate to consistent growth. The reality has been a bumpy road with significant revenue fluctuations. The challenge for BBAI is to prove they can move beyond this project-based, inconsistent revenue and establish a stable, growing stream of business that justifies their current valuation, which by many metrics is still quite high for a company that isn't profitable. For anyone looking into online investing with companies like Fidelity or Interactive Brokers, understanding this nuance is critical. You can't just see AI stock and a huge percentage gain and assume the underlying business is sound. You have to look at the numbers and the story they tell, which often runs counter to the emotional narrative that drives these huge price swings. Another critical factor in today's price action is the high short interest in BBAI. A significant portion of the float of the stock is held by short sellers, which means they are betting on the price to go down. When a stock with high short interest gets a string of positive news, even if it's not directly tied to a massive change in fundamentals, it can trigger what's known as a short squeeze. Short sellers have to buy back shares to close their positions and limit their losses, which adds more buying pressure and can send the stock price spiraling upward in a very short amount of time. This is a classic example of a price movement being driven by market mechanics and psychology rather than intrinsic business value. It's a momentum play. The traders who are in this are not looking at the long-term cash flow or the balance sheet. They are looking at the chart, the volume, and the news, and they're placing a bet on continued volatility. If you're one of those long-term investors using something like a Schwab Intelligent Portfolios or a self-investing platform, this kind of stock may not fit your strategy because it is more about trading than it is about building a stable portfolio. The reality is that a short squeeze is a temporary phenomenon. It burns hot and fast, but without a fundamental change in the company's performance, the stock will likely come back to earth eventually. The question for anyone holding BBAI is whether this rally is the start of a new sustained upward trend or just another one of these short-term, sentiment-driven bursts. The core disconnect is what makes the stock so interesting and frankly so risky. The company is trying to make a name for itself in a crowded and competitive space. It's competing with much larger, more established players, including companies like Palantir, which has a significant presence in the government data analytics sector. Even the general AI stock narrative that has lifted names across the board from Tesla stock to Nvidia stock has been a double-edged sword for BigBear.ai. It's brought them attention and capital, but it has also created a set of expectations that the company has so far struggled to meet from a financial standpoint. The bull case is simple. They continue landing these high-profile contracts, the government and commercial work starts to translate into consistent, growing revenue, and they finally move toward profitability. The bear case is equally straightforward. The revenue volatility continues, they struggle to manage the lumpiness of their government contracts, they may need to raise more capital, which could lead to further share dilution, and the hype eventually fades, leaving the stock to trade on its true and currently weaker fundamentals. This is not about a bad company. It's about a company with a strong narrative that has yet to consistently deliver on the financial side of that story. Looking ahead, what are the key things to watch? First and foremost, the next earnings report. Will they show that the new contract wins are actually translating into a positive trend in revenue? Will they update their guidance again? And if so, in which direction? The market will be watching this with a magnifying glass. Secondly, keep an eye on contract announcements. Every time they secure a new deal, especially in the commercial space, it helps build the case that their business is diversifying and becoming more stable. Third, pay close attention to the overall macroeconomic environment. Government spending is often tied to fiscal policies and budget cycles. A slowdown in federal spending could directly impact their business, regardless of their own performance. For anyone who self-invests or uses a platform like Robinhood, which makes it easy to trade on impulse, it is absolutely essential to not just react to the headlines, but to understand the deeper implications of what they are saying about the company's operational health. The tension between the promise of AI and the difficult reality of converting that promise into a profitable business is what defines the BigBear.ai story right now. Do you think the recent string of contract wins is enough to overcome the revenue challenges the company has faced in its last few quarters? Comment below with your thoughts about how many shares of BBAI you would need to feel comfortable with this level of volatility. Ultimately, the BigBear.ai story is a microcosm of the current market landscape for so many of these smaller AI-adjacent names. They get swept up in the broader excitement around artificial intelligence, and it creates this incredible expectation. The stock price can soar on a whisper of good news, but the moment the reality of the business's financial performance doesn't line up, the floor can drop out. This is not a situation where a quick chart analysis or a few minutes of looking at a stock's intraday movement with a Fidelity mobile app is going to tell you the full story. It requires a deeper look at the business model, the customer base, and the unpredictability of their revenue streams. Today's rally is real, the percentage gain is undeniable, but the underlying reason is likely a combination of short-term trading excitement and short sellers getting squeezed out of their positions. Whether this is the beginning of a sustained move or just another one of these short-term sentiment-driven bursts remains to be seen. The core challenge for BigBear.ai is to close the gap between market expectations and its financial reality. Until then, this will remain a stock defined by its wild swings and the constant tug-of-war between hope and the hard numbers.